A creator posted a public income breakdown after reaching 100,000 subscribers. His AdSense payment for that month was just over $200. His single brand deal that month paid $2,500. Most people assume the subscriber milestone is where the income starts. The math tells a very different story. We modeled 3 channel types to show what 100,000 subscribers actually produces and which niche earns the most. The 100,000 subscriber milestone carries real commercial weight. YouTube issues the silver play button at that threshold, and many brands use it as a minimum qualifier for paid partnerships. But the subscriber count alone does not determine what a channel earns. 3 variables drive actual income at this size: the content niche, the revenue streams that have been activated, and how actively the creator has built brand relationships. Understanding those 3 levers is what separates channels that treat 100,000 subscribers as a starting point from those that treat it as a destination. We built financial models for 3 distinct channel types, each representing a different audience profile. The first is a personal finance and investing channel. The second is a lifestyle and daily vlog channel, which covers general interest content with broad appeal. The third is a gaming and entertainment channel. Each model assumes 48 videos published per year, which is close to a weekly schedule with some gaps. Average views per video are based on Social Blade benchmarks for channels in the subscriber range. All revenue figures reflect 2025 industry rates from the Influencer Marketing Hub's Creator Compensation Report and verified income disclosures. This analysis is for educational purposes only. It is not financial advice. YouTube pays creators through its partner program. The central payment metric is RPM, which stands for revenue per mil. RPM is what a creator actually receives per 1,000 views, after YouTube retains its 45% platform fee. The variation in RPM across content categories is larger than most viewers realize. Advertisers bid more to reach audiences with demonstrated purchasing intent. A finance viewer actively managing money is worth more per impression than a gaming viewer browsing entertainment content. 2 channels with the same subscriber count and the same monthly view total can have very different AdSense incomes because of this gap. For the personal finance channel, the RPM benchmark in our model is $9. Finance consistently ranks among the highest RPM categories on YouTube. Top creators in this niche report benchmarks above $12 during strong advertiser quarters. $9 is a conservative starting point. Average views per video for the finance channel run around 12,000. At that RPM, each upload generates about $100. Annual AdSense revenue from that publishing schedule reaches approximately $5,200. For the lifestyle channel, the RPM benchmark is $4. Lifestyle and vlog content attracts advertiser categories with lower average CPMs, including fashion, food delivery, and general consumer goods. The audience is broad but does not carry the financial intent signal that advertisers pay a premium for. Average views per video for the lifestyle channel run around 8,000. $4 is the lifestyle RPM. Each upload generates about $32. Over a full year of publishing, annual AdSense income reaches approximately $1,500. For the gaming channel, the RPM sits at $2.50. Gaming audiences tend to skew younger and have lower average discretionary spending, which reduces advertiser willingness to pay per impression. Gaming channels at this subscriber level do tend to generate higher view counts per video than lifestyle channels though. Average views per video for the gaming model run around 18,000. At that RPM, each upload earns about $45. The gaming channel's full annual output earns approximately $2,100 from AdSense. The AdSense floor for these scenarios starts at around $1,500 for the lowest performing category. The best case reaches roughly $5,000. Neither figure supports full-time income on its own. The creators who sustain themselves at 100,000 subscribers are earning the majority of their income from somewhere else entirely. The creators who build full-time income at 100,000 subscribers do not rely primarily on AdSense. They build a revenue stack that treats the subscriber milestone as a credibility signal rather than a paycheck. Brand partnerships drive the largest income share for most mid-tier channels. The industry classifies channels in this subscriber range as micro-influencers, and that classification has become commercially valuable. Research from the Influencer Marketing Hub shows that channels at this tier average between 5 and 8% engagement per video. Channels above 1 million subscribers typically see engagement fall to 1 or 2%. Brands pay less per deal in the micro-influencer tier, but they get more actual interaction per dollar of spend. For the finance channel, a single sponsored integration commands between $2,000 and $4,000 per placement. We use $2,500 as the midpoint for our model. Monthly deals at that rate produce $30,000 in annual sponsorship revenue. For the lifestyle channel, sponsored content rates run between $600 and $1,200 per integration. The midpoint we use is $800 per deal. Monthly deals at that rate produce $9,600 in annual brand revenue. For the gaming channel, rates run between $300 and $700 per integration. The midpoint we use is $500 per deal. Monthly deals at that rate produce $6,000 in annual sponsorship income. The brand deal gap between categories is driven by audience economics. A finance creator's subscribers are actively managing money and evaluating financial products. A gaming creator's audience is browsing entertainment content. Advertisers price access to those two audiences very differently, which explains the large income gap even when subscriber counts are identical. Affiliate income adds a revenue layer that operates independently of the publishing schedule and requires no active brand negotiation. A finance creator linking to brokerage accounts or budgeting tools earns between $300 and $800 per month in commissions. The conversion value per referral is high enough in financial services to sustain meaningful affiliate income at moderate traffic levels. We model $500 per month for the finance channel. Across the year, that adds $6,000 to the annual total. A lifestyle creator placing affiliate links to consumer products earns considerably less per conversion. Monthly affiliate income in this category typically runs between $75 and $200. We model $125 per month for the lifestyle channel. That adds $1,500 to the annual total. A gaming creator linking to game titles or accessories earns between $100 and $250 per month. We model $175 per month for the gaming channel. That adds $2,100 to the annual total. Channel memberships add a third revenue line, and this is where category differences become most visible. Membership conversion rates across YouTube run between 0.5% and 1.5% of the active subscriber base. For a channel at this subscriber level, the midpoint of that range produces roughly 1,000 paying members. Gaming channels convert memberships at higher rates than other categories. The live and interactive nature of gaming content creates habitual community behavior that lifestyle and finance content rarely replicate. We model the finance channel at 300 members. The standard tier is priced at $4.99 per month, and at that membership base, the channel earns $18,000 per year. The lifestyle channel is modeled at 150 members. That base generates $9,000 per year in membership income. The gaming channel is modeled at 500 members. At the standard tier, that base produces $30,000 per year. We now combine all four revenue streams for a complete annual total. The finance channel earns $5,200 from AdSense. Brand deals add $30,000. Because the finance niche commands premium integration rates. Affiliate commissions contribute $6,000. Memberships add another $18,000. The combined annual revenue for the finance channel reaches $59,200. That figure exceeds the US median household income. Reaching it requires consistent publishing, active brand outreach, and maintained affiliate relationships. The creator producing this income is operating a small media business, not a casual project. The lifestyle channel earns $1,500 from AdSense. Brand deals add $9,600, which represents the largest income component for lifestyle creators at this tier. Affiliate commissions add $1,500. Memberships contribute another $9,000. The lifestyle channel's annual total comes to $21,600. The Bureau of Labor Statistics placed median U.S. individual earnings at approximately $46,000. That figure is for 2024. A lifestyle creator with all four revenue streams active earns less than half that figure. Full-time viability in lifestyle content at the subscriber level requires either a low cost of living environment or supplementary income from outside the channel. The gaming channel earns $2,100 from AdSense. Brand deals contribute $6,000. Affiliate income adds $2,100. Memberships, which perform strongest in gaming because of community engagement patterns, generate $30,000 per year. The gaming channel's annual total reaches $40,200. Gaming's membership revenue pulls its annual total nearly $19,000 above the lifestyle channel, even though gaming earns less from both AdSense and brand deals. Community monetization is what separates these two categories financially. The gap between the best and worst performing model is $37,600 per year. The subscriber count is identical across all three models. The entire difference is explained by niche and monetization infrastructure. AdSense contributes less than 10% of annual revenue for the well-monetized finance channel in this model. For the lifestyle channel, the figure is closer to 7%. Creators who optimize primarily for RPM are focusing on the smallest component of their potential income. The revenue lines that determine full-time viability are brand relationships and community monetization, neither of which depends on YouTube's ad auction. The niche choice is a financial decision that becomes harder to reverse over time. Switching content categories after building an audience requires retraining that audience's expectations, which typically produces a period of declining engagement during the transition. The income gap between a finance channel and a lifestyle channel at this subscriber level is large enough to treat niche selection as a foundational business decision rather than a purely creative one. The subscriber milestone is a commercial signal, not an income event. It tells brands and platforms that the creator has demonstrated an ability to grow and retain an audience. Two channels that reach 100,000 subscribers in the same month will produce very different financial outcomes 12 months later, depending on whether the creator spent that window building brand relationships and community revenue or simply continued publishing without expanding the revenue structure. The creators who sustain full-time income at mid-tier subscriber counts share a consistent operating pattern. They treat brand outreach as a recurring function of the business, not an occasional or reactive task. They build affiliate and membership revenue from the early stages of the channel's growth, rather than attempting to add them retroactively. The subscriber count is the input. The business built around that count is what converts an audience into a sustainable income. One more thing the model does not capture. These revenue projections assume a channel that is active across all four streams simultaneously. Most creators at 100,000 subscribers are monetizing only one or two. The gap between what the channel could earn and what it actually earns is often not a subscriber problem. It is a business infrastructure problem. The audience already exists. The revenue is not being collected. Leave a request in the comments if you want us to model a different subscriber tier or channel type. We run the numbers every week. Subscribe so you do not miss the next one.